August numbers are in and they tell a very different story than what you're hearing in the media. Yes, some prices are up, but sales are down, inventory is sticking in certain zones, and with the Bank of Canada now expected to cut rates again, thanks to the brutal job data, everything could be shifting. The question is, are you positioned to win when that happens, or are you sitting in a soft zone about to sink? Most people are frozen right now, wondering if they should buy now or wait for rates to drop, but the truth is some pockets in Vancouver are already seeing seller-friendly price surges, while others are quietly slipping into heavy negotiation territory. I'm going to break down the exact neighborhoods, price bands, and property types that matter right now before the rate cut changes the game again. As we get to the market overview here by region, we'll start with downtown. There's over 1,155 attached available homes, sitting at 11% sales ratio, so just in buyer market conditions, with the average attached market being at $835,000 per unit. On Vancouver's west side, there was 979 condos or townhomes available at an 18% sales ratio, which is balanced market conditions, but starting to creep up near seller market conditions at 20%, and 727 detached houses, 8% sales ratio, which is an extreme buyer market condition there on Vancouver's west side. When we look over to Vancouver's east side, you'll see on the screen 654 attached units at 16% sales ratio, so balanced market, and 629 detached homes, 10% sales ratio, buyer's market. So as you can see with the overview here, again, the big power in terms of getting that value is both in the detached space. I've been saying this for a while, especially if you can afford to get in on the west side at 8%, as you can see on screen, you're going to get some really good value in the coming years. There's a lot of homes, and I'm just going to be going to a showing here later, homes that are dropping their pricing, they can't get what they want, and there is good value out there if you have money on hand. As we get into the downtown market first, and you can see on screen here, we have a little bit of a chart that we're going to go through. So the downtown market shows clear buyer advantages with an 11% sales ratio. Properties are selling 3% below list price on average, taking 41 days on market. Keep in mind that 41 days on market is skewed. A lot of people will terminate their listings or they will expire. You can bring them back on market. It resets the clock. So a lot of these 41 days on market, it's likely well over 100, maybe up to 150 days on market. The most active price band in between that 400 to 500,000 mark at a 32% sales ratio, so heavy seller market conditions. Obviously, that is a framework where there's not going to be a lot of availability. A lot of those in that space will likely be leasehold as well. With this graph here, you're going to see the downtown market split up between Yaletown, downtown, West End, and Cole Harbour. And this is just showing sales from August. And you can see here in the downtown market, there was 56 sales. The Yaletown had 41, West End at 27, and then Cole Harbour just at 5 sales. And that's why that sales ratio is so low in that Cole Harbour. If you're looking for value, I know Cole Harbour isn't for everybody. It's a little bit sleepy, but you can get some beautiful water views there, close to Stanley Park, close to the seawall. It is a little bit sleepy, but there is a lot of opportunity in there in that downtown market in Cole Harbour. When we look at the inventory levels, and that's something that I've been watching for a while, with most markets, we were seeing a run up from December up until June or July. And in the downtown market, we've definitely seen a big flat line in terms of inventory. In April, we saw 1,293 inventory, and in August, 1,155. We've seen, 2 consecutive months of a decrease of inventory in the downtown markets, and inventory kind of flattening out here since April. So this is showing that, perhaps the logjam of inventory, those days are starting to be over. I know my perception on the market is, you got 10 months to get really good value here. When we have those financial pressures of those mortgage renewals in 2025 and 2026, the last subsection of homeowners who are around that plus or minus 2% rate drop, when that evaporates late next year, the market's still going to be soft after that point, but the financial pressure is not going to be there. Once we get to the latter half of 2026, people who are renewing their mortgages from 2026, 27 onward, they're going to be about par. So there's not going to be a financial consideration, and that's why we've seen a big run up in inventory levels, because people were trying to jump the gun. They wouldn't be able to make the renewals, but that is going to slowly start to evaporate. As we head to the next slide here on the west side, the detached housing analysis here, and you can see a couple things here. Housing pricing here is just over $3.1 million for the average home on Vancouver's west side. 97% sale to list ratio, so homes are selling 3% below asking, and on the price point, pricing is down 3% 3% month over month, which is pretty heavy. 37 days on market, average time to sell. And then you can see here with the note, the Westside detached market presents a strong buyer's market with only 8% sales ratio with 727 properties and just 55 sales. So a big opportunity for you buyers if you're looking on that detached space. If you look for the hottest community on Vancouver's west side, Arbutus leads with a 21% sales ratio. So just in seller market conditions, while Shaughnessy is on the opposite end, a 1% activity. So there's a lot of inventory on that Shaughnessy side. And if you are in the space looking for that luxury, Shaughnessy is definitely somewhere that you're going to want to look at. There was 87 active inventory in August and just one sale. And rounding out the inventory levels too, we're seeing a flat lining here. We've had 2 consecutive months as well with a slight decline in inventory. So it looks like maybe we're starting to see the peak in terms of those inventory numbers there. When it comes to the Westside attached market, we have a little bit of a graph here online. The attached market here shows balanced market conditions, 18% sales ratio, indicating healthy operations for both on the buy and the sell side, depending when you're looking at. Here in this graph here is just showing some of the price bands in terms of the inventory and sales in these price ranges here. So properties are selling at 99% of list price with average 24 days on market. The 700 to 800,000 range shows the strongest seller conditions at 35%, though, so that is seller market conditions. In that 7 to 800 range, you're going to be looking at maybe some elevated 1 bedrooms or some 2 bedroom, lower end 2 bedroom units. So pretty good entryway point for that. With these graphs here, and what you're going to see, in this 700,000 to 800,000 range, there's 89 inventory with just 31 sales. And this just shows you by price band where the opportunities lie. 8 to 900K, again, the sales stack up pretty nice. You can see that there's a pretty big discrepancy in this 1 to 1.25 million, 145 inventory with just 30 sales. So this would be a price band that I would be looking at in terms of being able to attack something to get some value. On Vancouver's west side, when it comes to the attached market, we've had 3 consecutive drops of inventory. So the maximum we saw was 1,151 units in May. It has dropped down to 979. So we're starting to see something tailing off. It'll be interesting to see in September data with all this if we've had a spike up in inventory. But in most markets now, we're starting to see that inventory tail off. As we get into the next one here on Vancouver's east side, you can see that the east side detached market shows buyer market conditions at that 10% sales ratio. The market offers more affordability entry points compared to the west side. Obviously, the sweet spot here is in that 1.25 to 1.5 million range, but that is sitting at 33% sales ratio. So that's seller-friendly market conditions. There are homes on that bottom end, but keep in mind that's going to be lot value only. You can find some detached homes that are priced in around here, but they're also going to be small lots, maybe irregular frontages that are in 20, 25 feet, very short lots, 2,000 square foot lot sizes. So in this market, what I'm telling a lot of people, try not to buy a property with a question mark. If you see a home, and there are listings on Vancouver's east side, they're beautiful renovated homes. I saw one just the other day, but it was on an alley, so an irregular lot, very small lot. That is going to be a huge problem for you if you ever sell in the future. In terms of community highlights, Fraser and Hastings Sunrise lead with 20% sales ratio, while Maine shows exceptional at 23%. So you're seeing some of these areas are starting to change a little bit in terms of the seller market conditions. I'm not saying pricing is changing. I'm just saying the market dynamics in some of these sub areas. So overall, 10% sales ratio, we've gone over that. 96% sale to list and 15 days on market, quick sales. But keep in mind, most of these are going to be because they did a price reduction. Once you're in that sweet spot, properties are starting to move in that area. When we look at some of the inventory levels here, in June was the pinnacle, 693 units. In August, it dropped to 629. So we've had 2 months of inventory starting to drop. Sales are about evening off here as well. So there's going to be some good opportunities out there in terms of some of these communities, in terms of highlights of where you want to get some value. I mean, Renfrew Heights is sitting at 5%, 55 inventory, 3 sales. sales. Renfrew itself, 71 inventory, 6 sales. So there's a couple markets here on Vancouver's east side, but we're starting to see a run up in terms of some of these situations such as Main Street and some of these areas starting to take a little bit more popularity with the market share. When we get to the Eastside condos and townhomes here, the Eastside attached market is at a 16% sales ratio. Properties are selling at full list price, showing healthy demand, but keep in mind a lot of this is going to be because they reduced pricing. Price performance, average sale price increased 11% to 806, showing strong appreciation. Community leaders, Champlain Heights at 50% sales ratio, Main Street 37% ratio, shows the strongest seller market conditions. So we know that the attached market has been performing better than the detached space on both the east side and the west side. When we look at overall market activity here in number 2, 104 sales from 654 inventory, and then the 900,000 to 1.25 million range performs best with 25% sales ratio, indicating selling favorable conditions in this price segment. So if you are looking in this 900 to 1.25 range, so this is going to be the 2-bedroom style of home, likely maybe an older townhome can get you up into that 1.25, 1.1 range as well. But that is an area where there is some competition in the space. Inventory levels, have had 2 months of drop, going from 757 in June down to 654, and the pricing has exploded a little bit. Last month it was $726,000 the average attached home, and now it's $806,250. So we've seen a little bit of a run up in terms of that stat. I know for myself, I just had a beautiful property listed on East 16th. We were just on market, received multiple offers yesterday. We're seeing a market where there's a little bit more popularity and urgency with buyers, where we haven't seen that the last little bit. In this particular pocket, we had some very strong marketing numbers and got in there. So just because there has been a lot of inventory doesn't mean that there's been a lot of good inventory either. So if you have a beautifully marketed home, it shows really nice, a good floor plan, these will still move very quickly despite the market conditions. When we go into the price band performance analysis, you can see the market activity varies significantly across price ranges, with mid-market segments showing strongest performance across all regions, and that's not to be surprised. So, in these ones here, in this 400 to 500,000 market here, you can see that downtown sales ratios at seller market conditions at 32, Westside at 25, Eastside at 11. But you're not going to really be able to get anything from here. In that 7 to 800,000 range, things change a little bit. What you're going to want to see is, at this, essentially in this 15 to 20 mark, you're in balanced market conditions. As you start to get forward from here, you're in these selling sides. When we go into the west side here, 35% sales ratio in the 700 to 800,000 band, and then in the 900,000 to 1 million on the west side, again, just in seller market conditions, and on the east side as well. So this is an interesting graph just to watch between these 3 segments here. As we start getting past this 15% and getting into seller market conditions, they are starting to come through a little bit more, and that's something we haven't seen. We've seen some of these really popular areas sitting in low balanced market conditions, sometimes even in buyer market conditions, but we're starting to see a little bit of growth from that as well. When it comes to my strategic recommendations, I have a couple here. So for buyers, focus on downtown and west side detached markets 100% for maximum negotiating power. Cole Harbour condos and Shaughnessy homes for luxury, if that's something that you want. I know of people who are buying some of these older Shaughnessy homes to build in that area, getting access to a very high-end exclusive space where you have a lot of negotiating favor. For sellers, Yaletown condos, Arbutus detached homes, and Eastside properties in the 900K to 1.25 range offer best selling conditions. And then for investors, Eastside shows the strongest price appreciation, 11% increase, while maintaining balanced market conditions for future growth and potential. I mean, with investors, I will caveat, you got to be very, very careful in this market. Unless you have cash or a lot of it where you can have a small mortgage, you still need to be very careful, because we're still not out of the woods. But you definitely can pick up something, and if your margins make sense, even though the rental market has dropped, you can have some opportunities in there as well. Market outlook and summary. The real estate market here shows some regional characteristics. You can see in certain sub areas, the property values and the property stress in terms of pressure points are starting to increase. How is this going to play out through the fall is going to be very interesting. As we highlighted here, buyer market conditions for sure, downtown condos at 11%, and we've highlighted what's going on in the detached space as well. On this balanced market side of things, that's more in the attached areas that we're seeing that Westside condos and Eastside condos are sitting at pretty strong balanced market conditions. And then with the price trends, the Eastside leading appreciation while other regions show stability or modest declines. Again, this is just in August to September, coming out of a summer to fall. I'm just reporting on the data. I'm not saying that this is a sign of a change. My personal opinion is that we're still going to be on a very soft trajectory for the next 2 years, but I think your best value for a buyer is going to be in the next 10 months. So that's what I have for you in this package here. And thank you so much for tuning in. And make sure if you need any further information, book that discovery call with me in the description below or scan that QR code. I'll see you on the next one.